Hey guys, welcome to today's edition of the London Session Open. Today is September 19th, 2019, and it's 15 minutes until 10 a.m. in London. This is a recording, mixed recording and live webinar we're doing at the same time. Sorry for the technical issues we had this morning. I just noted for myself, I've been speaking for about 11 minutes with no sound on, but now we're on. Okay, so because we lost a bit of time, and I know you guys are busy, we're gonna do things slightly quicker here. So what happened with the dollar here? Well, they cut interest rates, but the dot plot is not as dovish as it was before. Before, as far as I understand, the dot plot was indicating I think 2 rate cuts before the end of 2020. Now it's indicating no change. So it's not really a very dovish Federal Reserve. As well, we had some issues with overnight funding and interest rates spiking in the US. The Fed didn't care about that, and that as well was something that was viewed positively because that indicated that they're not really ready to flood the market in any way. Now, what I would do here, I mean, the market declined, right? So yesterday we said look to sell at 110.71 for the market to go down a bit. It did go down a bit with about 58, 60 pip. The market is now revisiting that level, and as long as trade below 111.12, the trend is bearish. Okay. However, though, so why is it not going much lower than if the Fed is not very dovish as they thought? I think because the headlines and all of that, it is important, and I think do people use that to have a view, but in the short term now, all these headlines and events, they just create a lot of noise, and then nothing really happens, right? I think if you look at it from a bigger picture perspective, it's far more easier to understand why people don't necessarily want to sell here. If you use this Andrews pitchfork, which has done a good job since pretty much October last year, it is indicating that the best spot to sell the euro dollar is around the 111.12, 111.75. So that's the longer term outlook, and that's what I would be looking at. But if you're just looking, where's the next 25, 30 pip, then focus on 111.12 and just being bearish below that level between 110.71 and 111.12. However, if you're looking for that longer term move, like that sweet spot where you can short sell and probably not worry about the market for a few weeks, then that's the higher levels and a 112. And this is also could explain why the market does not want to trade much lower. Okay, here's the pound, and the Bank of England is hosting the rate meeting today. They're probably not going to do anything, and the reason for that is that the Bank of England, they want to keep the powder dry for Brexit-related issues, unless, of course, the economy contracts strongly. I don't think, though, that that's really what's happening right now, and I think there's going to be a situation here where not much is going to happen. We had a little bit of a contraction in the first or second quarter GDP. And we're going to have, I think it was the first quarter, second quarter, a bit like Germany. And then after that, the next quarter is probably also going to be a bit soft. Now, going forward here, I think technically, let's just wait for the big picture to align it, a short term to align itself with the big picture. So in the short term, again, if you want to know where the next 50, 30 pip are, I still think people are going to be buying here for the market to go upwards, and the trend is going to be bullish of 123.09. In the bigger picture, you see that bullish uptrend, and it needs to align itself with the big picture. And when we take out 123.09, then that's when that would have happened. And at that point, we're probably going to revisit maybe 120. Same thing here with the dollar versus the Japanese yen. The trend is short-term bullish of 107.43, and this is the sell zone. And if we trade below here, I think we're going to align ourselves with the big picture. For now, it's short-term bullish. So again, if you just want to have a little edge here, next 10, 20 pip, then I think if you really want to, you can buy maybe at 107.70 or something like that, and then go up to 108.50, and then that's it. I would focus on US oil, if anything, of the different commodity markets. It's been definitely a difficult situation here. What happened, we had that big move, and then you had the resumption of crude oil production in Saudi Arabia. 50% of what was lost of production capacity has been reintroduced. And it looks like they're gonna sort the rest out in the next few weeks. I reckon that, you know, the next step, what's gonna drive here, is if we have any military escalation against Iran. If we don't, you know, it's just gonna fizzle out this, and then that's gonna be over. Now we're within that triangle, and I think if we do trade above something like 59.42, I think the market could resume its uptrend. For now, though, it looks like it wants to drift lower. It might even try to close that gap. Gold prices, they were volatile yesterday, and the reason for being volatile is just because of the Fed rate meeting. So I put my levels here, and we did slip slightly below that level, but now we're pretty much back up here. When you deal with these situations around Fed rate meetings and stuff like that, you always need to widen the stops a bit uh, to not be caught out in the short-term volatility. And a setup like this one, yeah, it's higher risk because we're so close to the stop loss. Above 1482, the trend is bullish. When we go up to 1540. German DAX is consolidating. It might go upwards. You know, that would not surprise me. But up here is the sell zone. Obviously, if it consolidates here for a long time, and we do take out these levels here around 12,668, we would probably trade slightly higher to 12,887, followed by the double top here at 13,195. But we need to have some sort of a pattern, I think, here for people to get really sort of excited. So I still think this market is gonna spend some time here, but then eventually go down. S&P 500, it's just at the highs. A few weeks ago, we said you can buy down here. This is the take profit area. I insist on that. The alternative is to spend a bit of time here and then eventually trade upwards, but we're not there right now. And I think that's pretty much it. I think we covered all of the main markets. Let's see if you guys have any questions. So sorry about the sound, by the way, guys. So we got a question from Marvin. Can we take a look at the pound Aussie dollar? Sure. Let's do that. Okay, so this is the pound versus the Aussie dollar, and the Aussie dollar in general is just losing out quite a bit. Yesterday, by the way, I did a video. You'll find it on the home page. Let me see here, on the ATFX page. This one here. Looks like this one was unlisted. That's bad. Alright, that's bad. Unless you were on my Twitter, you would have missed this, but I covered a bunch of setups in the Aussie dollar yen, Aussie dollar USD, and Aussie dollar Swissy, I think it was as well, and Euro Aussie as well. You can check it out afterwards. It could be good. You can potentially learn something. So the Aussie dollar looks to lose out more. You know, for the last few days, people have been super excited. You know, I don't know what happened. Well, they delayed. There was a bit of love and affection between U.S. and the Chinese governments. They decided to have a bit of a break. On October 31st, there's some big celebrations in China. So I think they don't wanna. They want to take it easy around this period. And as soon as that's over, things can become a bit more aggressive again. In either case, Aussie just gained quite a bit on that, and then after that, now it's slowly giving up. And what happened with the Aussie employment numbers is just that. Sorry about that. What happened with the Aussie employment numbers is just that they were slightly softer unemployment rate, but I think there was the composition of labor market jobs that were not really what the market wanted. What can we say about this then? Well, technically, we're definitely in a short-term uptrend. Is there any pattern? I'm going to change the price feed here. I don't actually see any solid pattern, but I definitely see an uptrend. So I think as long as I'm pressing the wrong button here. This is your 6 hours. So this is a take profit area in the short term. I think if we maybe go to something like the 30-minute, you have this low here, but I think realistically this is going to be enough. So this is sort of, I think this was around the time you got the unemployment figures out. I think it was, yeah, it was here, 230. And I think at least in the short term, you can probably put FIPS on this like that. Then probably down here, 50% correction or so, potentially, could potentially be something for you. And then like that. Beyond that high, I think we could probably go like that, 185.86. Okay, guys, we're gonna wrap things up. I want to thank you so much for watching, and sorry so much for the technical issues. Hopefully, I'll be back tomorrow on time with no audio issues. Thanks so much for watching, and don't forget to like the video. Thank you, and bye.